Hi there, welcome to a Kneppy Invest, and welcome to the stock of the day. Take two. I forgot to hit the record button, take one, and it could have been the greatest video I have ever done. It would have been life-changing for most people who'd watched it. In fact, it probably would have won an award, any sort of video award, because of how brilliant it was, but I forgot to hit the record button. So instead, you get this absolute dreck of a video in its place. Anyway, today's stock of the day is Johns Lyng Group. Unfortunately, it's not the stock of the day for any good reason. In fact, it's completely bad reason. Potentially, perhaps, the worst results I have seen so far in February. The market has completely punished this company. Share price down about 35% last time I looked. It's still down 35.53%. I'll talk about why the share price is down a significant amount. There's a few reasons behind it. In fact, I'd call it a double whammy. So two really big reasons why the share price is down a fair bit. And then we'll have a look at the chart for this company. Now, for those who don't know anything about Johns Lyng Group, this is sort of like would you call it a construction company? An insurance construction company, something like that. And they do rely on natural disasters because natural disasters tend to cause damage to houses. And that's where Johns Lyng Group comes in. So I think it works like this. Say you have a house that has been damaged by a storm. You talk to your insurer and you come to an agreement that it needs to be fixed. And then the insurer talks to Johns Lyng Group because they have some sort of relationship. And then Johns Lyng Group comes around and fixes your house. So that's one of the things they do. I don't think it's all they do, but it's just one of the things they do. So that does mean that when there are more natural disasters, Johns Lyng Group does get more work. And that's very important when we talk about their results and why the share price is down. So let's have a look at their media release. In fact, this was one of the first results I did see this morning because I was quite interested in this company. I would not define this company as high quality. I'll just get out there right now. And one of the reasons behind it is because they are dependent on weather. Okay, so a few really interesting tidbits in this particular announcement. Now, the numbers were weaker than expected. I did get a quote from Citi, and they actually stated, while we have been expecting a soft first half result, I think most of the market was, it was well below our expectations. So when a company comes in and releases their results and they're below expectations, that's a first whammy. You're not going to see the share price go up. More likely, you're going to see the share price go down a fair bit. Now, the reasons behind why the performance was a little bit weaker than expected comes down to challenging operating environment with benign weather conditions. So again, this company is, I wouldn't say overly reliant on natural disasters, on bad weather events, but they do need it, which is really interesting. So this company is cheering for climate change in a way, which is sort of weird. Anyway, it's not the only reason why they did perform badly in the first half. Now, the reason that's important is because there is reduced volume of insurance claims, so they get less work. Anyway, and additionally, work ramp up in the Northern Rivers region of New South Wales progressed more slowly than expected, while in the United States, project commencement delays also impacted performance. Now, they did mention that these are short-term challenges. Now, some of those reasons might be under the control of management. They may be able to fix them. But benign weather conditions, unless they have some sort of weather machine, they can't do anything about it. They're just, I wouldn't say a slave to the weather, but they are overly reliant on something that can be completely unpredictable. We just don't know. There is a possibility that the Queensland coast could be affected by a tropical cyclone. We just don't know at this point. And I'm saying within the next week. We just don't know where and when or even if. And there's a possibility maybe it's going to be hit by 2 or 3 tropical cyclones. And then maybe this year is going to be really bad for weather in Australia. And that could really benefit Johns Lyng Group. Now, when I'm talking about the double whammy, we've already talked about the first whammy. The numbers were a little bit worse than expected. But the double whammy comes when the company issues a downgrade. That is the worst possible scenario a company can face. Worse than expected results, and then also issuing a downgrade. Now, a downgrade or an upgrade in itself is the most powerful type of announcement because it changes the expectations of analysis, and they have to put different numbers into their value machine. And when they put these new numbers into the value machine, it spouts out a much different valuation of the company. And when it's a downgrade, that valuation is going to be much lower. So they do mention that they have updated, not upgraded, updated its guidance for financial year 24-5. And you might be saying, EBITDA only down 4.5% from previous guidance, and revenue only down 5% from previous guidance. You might be saying, well, the share price is down 35%. This is only a small deviation from what they expected beforehand. But it's a downgrade. It doesn't matter. It's a downgrade. The market has lost faith in this company. The market is saying you should have been more conservative. You were being a little bit too bullish with your guidance. And I actually do like when management of companies are much more conservative when they're talking about their guidance for the year or expectations, because things go wrong all the time, as we can see with Johns Lyng Group. So I am attracted to companies' management who are naturally conservative when or if they issue guidance. So that's the reason why the share price of Johns Lyng Group is down 35%. Worse than expected results, and also a downgrade, a double whammy. I did not go through the rest of this, but they do talk about quickly. I went through this really quickly, sort of speed reading, but they did talk about some more in this second last paragraph. They do talk about severe weather events, Los Angeles wildfires, stuff like that. So this company is reliant on natural disasters for growth, for revenue, for receipts, for all that jazz, or profits, which is sort of weird to think about. I have heard someone, I forget who, so they took a position in an insurance company and took a position in this company, sort of like a hedge, which is sort of an interesting way. And insurance companies are doing really well now because one of the reasons, benign weather conditions. Okay, so let's have a look at the chart for Johns Lyng Group. By the way, this video is longer than my previous one. This is Johns Lyng Group weekly chart. This was a bit of a market darling between 2019 and 2022. Share price went up ninefold during that period, from about $1 all the way up to $9 at its peak in early 2022. Since then, it's been struggling. In fact, the share price right now at $250 is at a 4-year low. And not only that, the chart, daily chart, looks really weak. Pretty negative week. Now, this is the second really bad result in a row for Johns Lyng Group. When they released their numbers in August of last year, full-year results, share price dove 27%. Share price then went sideways for 6 months, and then they released these results. Funny enough, two completely different reactions from the market. In August, a sell-off from open, and then the share price didn't move much during the day. So you could say the market didn't overreact. Today, share price has just continued for all through the day. That's why the candlestick today is a solid red candlestick. But back in August, it was actually a green candlestick, which means the share price actually went up during the day. So completely different reaction. Also volume, much bigger volume today. So I would actually say this has been a much worse reaction from the market. Share price is down by more. And it's just, we've seen consistent selling through the day. Okay, that's all I have for the stock today. Johns Lyng Group. If you have any questions, any thoughts, maybe you're wondering why Zip is not the stock of the day, or why is Point Terror not the stock of the day? Profitable, share price up 30%. Why is that not the stock of the day? People do think that. You should be choosing this as a stock of the day instead of this. How dare you? Anyway, I'm being a little bit dramatic saying that. I've only known one person who has written, if you can call it a person, who has written to complain about my choice of stock of the days. Anyway, if you have any questions, any thoughts, leave those in the comment section. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.